Hello everyone, and welcome to another edition of IronFX Viewpoint. I'm Marshall Gittler, head of Global FX Strategy here at IronFX. Continuing on with my series on the market's outlook for the currencies, today we're going to discuss the outlook for the pound. The pound is one of the currencies where forecasts are closest together, but there are still some people who think it'll go up, and some people who think it will be down. On average, the consensus is for a modest depreciation of the pound of around 4% this year. But in this series, I'm not interested in the consensus, I'm interested in the extremes. Citibank is the firm that expects the pound to appreciate the most this year. They're looking for it to gain around 6% more beyond its current levels. The basis of this call is that they're very enthusiastic about the UK economy. They expect it to grow by around 3.2% both this year and next year. That's much higher than most people. The consensus is 2.6% this year and 2.4% next year, while the Bank of England expects 2.8% this year and 2.3% next year. So they're much more bullish than the rest of the market or even the authorities. Against that background, they expect the first rate hike to come in the fourth quarter of this year, which is a lot earlier than both the consensus and the Bank of England. This graph shows what the market is discounting for the Bank of England rates over the next several years. It implies that the market's assuming that rates start rising in about 18 months, and the first rate hike comes somewhere between then and 2 years from now, which would be somewhere around the end of 2015. So Citi is expecting rates to rise about a year earlier than the market is, which would mean a much stronger currency. Now, one of the questions people have about the appreciating pound is whether it might delay a rate hike. That is, if the authorities are worried that the pound is getting so strong that it's damaging the country's exports, they might delay a rate hike in order to keep the pound from appreciating. But Citibank points out that the economy is being driven by consumption, not production, and so any sterling appreciation would probably be perceived as increasing the real purchasing power of the UK consumer rather than undermining exports. Of course, if it went too far, it might start to worry the Bank of England, but not at these kinds of levels. They believe that the improving fundamentals of the UK economy give the Bank of England more room to tolerate a stronger pound. On the other hand, the most bearish investors on the pound are HSBC. They expect it to fall to 1.5 pounds to the dollar by the end of the year, a drop of around 10% from current levels. The main reason they give is that they expect investors to look beyond the data and into the quality of the recovery. They argue that the recovery has been dependent on an active house market and rising house prices, which encourage higher consumption. As you can see in this graph, the economy and house prices really do move together in the UK, although it's not clear whether rising house prices are boosting the economy or a recovering economy encourages people to buy a house. In any event, HSBC argues that this isn't sustainable over the long term. An economy can't grow indefinitely just by people selling houses to each other. They also think expectations are getting ahead of themselves. This graph shows the economic surprise index for the UK, US, Japan, and Eurozone. An economic surprise index shows how much the actual economic indicators exceed the market forecast. It's a good gauge of market sentiment because it shows how an economy is performing relative to expectations. If an economy is exceeding expectations, people can turn optimistic even if the statistics themselves are still discouraging. Back in August, the UK index, the red line, used to be the highest one by far, meaning that the UK economy was surprising everyone on the upside. But since then, it's fallen to be almost flat, meaning there's little surprise, like the Eurozone. It has turned up over the last few days, though. So expectations in the UK have largely caught up with reality. HSBC also worries that doubts about the durability of the UK recovery may start to threaten the capital inflows that are necessary to cover the country's very wide trade deficit. Concern about the widening trade deficit could also weaken the pound. As you can see here, the UK has a huge current account deficit, the red line, and it seems to be widening further, although personally I don't see much connection between that and the value of sterling dollar, the blue line, especially after 2005. My view, I'm sympathetic to a lot of what HSBC says. The recovery does seem to be dependent on borrowing and spending, either spending in the stores or spending on a house, and the country is getting dangerously indebted. Nonetheless, I don't think the UK recovery is going to end that quickly. I think the economy there is likely to continue growing, and whether they raise rates or not, the market will continue to anticipate that they will raise rates. At the same time, I don't think the country will have much trouble attracting money from abroad as inflation keeps falling. Moreover, looking at the graphs, I don't see much connection between the trade deficit or the current account deficit and the pound. The currency seems to ignore what's going on with trade. So I'm not convinced that a further widening of the trade deficit will hurt the pound. In short, I think that the pound can rise further, and I'd be more in the bullish camp than in the bearish camp. So that's my view. This is Marshall Gittler, head of Global FX Strategy and IronFX, wishing you solid trading. IronFX, the global leader in online trading, would like to thank you for your support in 2013. I promise that in 2014, we will continue to offer the best service. On the occasion of the Chinese Spring Festival, we would like to wish you 新春快乐，马年龙马精神，马到成功，马